My name is Brian Calvinson, and I'm with the Kirk Miller Insurance Agency.
I'm Mike Berg with Berg Insurance Agency.
And I'm AJ Scott with Klein Agency Insurance Brokers. And we all serve together on the Insurance Task Force for CAI's California Legislative Action Committee.
It's no secret that wildfire insurance has become a big problem. Ultimately, laws of supply and demand are simple. If there's low supply and high demand, prices surge. In the case of wildfire insurance, the demand for coverage is growing by the day, while the number of insurance companies offering coverage is shrinking. We are experiencing the results, and unfortunately, it's likely to get worse before it gets better. One of the questions we're commonly getting from communities is, why aren't the big name companies like Travelers or Farmers willing to insure us? Briefly put, the preferred or admitted insurance companies, they file their rates with the state of California's Department of Insurance, and they cannot charge more or less than what their rates allow. Insurance companies are in the business of taking on risk, but if a community is too risky for the premiums that they can charge, they won't offer coverage. This leaves the non-preferred or non-admitted insurance companies as the only option. And those companies typically offer less coverage, higher deductibles, and at times eye-popping premiums.
So Brian, would you, for a parallel perhaps, can we draw a parallel between, say, a community that is in a place where there would be a high risk of wildfire to maybe a community that has a pool without a fence or balconies without railings? These are exposures that insurance companies that don't fit the insurance company appetite. And so the insurance company says, this isn't a risk I'm willing to take on.
Yeah, you're absolutely right, Mike. Ultimately, there's a price for everything, but those admitted insurance companies, they can't get that premium. So they might look at something like an unfenced pool and say, well, okay, if we could charge another $50,000 a year for it, great, we would do it. But their rates don't allow them to get there. And that's why they might see something like those wide balcony railings or an unfenced pool and say, hey, this is too much for us. We can't charge for this exposure. And then it gets kicked into that secondary market.
And in that secondary market, Brian, we're hearing that, community managers are struggling with accepting some truths. So we're just going to deliver them right here. Is it true that the cost of insurance can be as high as it is? Question mark. Yes. The answer is yes. Unfortunately, insurance carriers in this surplus market have a lot of flexibility with how much they want to charge for premium to accept the risk. And when we talk about accepting the risk, we're talking about the cost to pay a claim for a wildfire burning through a community or a liability claim. Even so much so that some carriers aren't even offering to insure a property to its full value. So when a community manager asks me, hey, Mike, is it possible that insurance carriers aren't willing to write the full replacement cost of our community? The answer, sadly, right now is yes. The truth is some carriers, some communities are not able to find insurance to 100% of their replacement costs. But that puts them in breach of their governing documents. That puts them in breach of their CC&R. The CC&R require an association to insure to full value the property it's responsible to maintain. And that can be sticky because the governing document is a contract. It's a legal document. So it's really important to work with not only your insurance professional, but also your legal counsel when working through some of these issues.
Yeah, speaking of insurance professionals, CAI offers a designation titled Community Insurance Risk Management Specialist, or CIRMS. Earning that designation involves multiple years of experience insuring community associations, and it also involves several years of volunteering for CAI committees, writing articles, making other contributions to the HOA industry. He agrees with me. The insurance professionals who earn this designation are not casual toe dippers in HOA insurance. They're committed to serving community associations. They have not only the lexicon to represent your interest accurately before the insurance marketplace, they also tend to have the depth of knowledge that's needed to collaborate with your attorney, to review your governing documents, to clearly answer questions from your residents as to what the association maintains and what each one of them needs to maintain to supplement that coverage. Finally, they're able to advocate on your behalf with underwriters and claims adjusters. And for those of us working with the California Legislative Action Committee, we're advocating with state regulators and legislators as well.
So a community association gets a non-renewal letter, AJ, and the knee-jerk response might be to take that shotgun approach and contact every insurance broker out there for terms. I mean, what are your thoughts? What do they do?
That's so natural. You're thinking the more brokers I contact, the more options we'll get, the more competition there will be. It's counterintuitive, but working with many brokers is actually more likely to diminish your results. They run into each other in the marketplace. Their credibility is questioned when an underwriter has seen the same account 6 times from 6 different brokers. They're less motivated to give their best terms to those multiple brokers. So instead of expanding your available options, it frequently restricts them. We would suggest selecting one expert. Ask them for examples of successes that they've had placing community associations like yours with high wildfire risk scores in layered commercial insurance programs, and then ask them for references, people who can speak to those success stories. In closing, we want you to understand that we know that the rates that you're seeing right now and the terms that are coming with them, the actual coverage that you're getting, are not sustainable. And it's absolutely understandable that you feel frustrated and powerless, but we want you to know there is something you can do. We want to urge you to participate in the California Legislative Action Committee's call to action and a survey where you can tell your story. You can do this by visiting caiclac.com and click on the current campaigns page.
Thank you very much for joining us. Stay safe and healthy.